the Accenture results that have just trickled in. Accenture has reported a healthy set of numbers for the first quarter. Quarter one revenue came in higher than estimates at $17.69 billion. The tech major also raised its full year revenue growth outlook to from 4 to 7% from the previous estimate of 3 to 6%. But tell you what, let me get my colleague Anisha Jain in to give us a fine print of the results. So over to you, Anisha. All right. We'll get you Anisha later on. But for now, Sandeep Agarwal, who's the fund manager of Sowilo Investment Managers, is joining us. Hi, Sandeep. Thank you so much for joining us today.
Hi, good evening. Thanks for having me on the call. Yeah.
Right, Sandeep. First up, the numbers have just trickled in. It's looking like a healthy set of numbers that Accenture has posted. What is your first? First have a look at it, and what's your first account of the numbers? What is it that you see in these numbers? How are you reading into them?
So I think there are key take numbers. Remember, this is only first quarter for Accenture. So despite that, there is 1% quite positive. Secondly, the current quarter number, particularly that has been increased substantially. Guidance for Q2, that is 5 to 9%. That is a big jump versus full. On the current quarter, they are very optimistic, and for the full year also, they are adjusting that increase in guidance for current quarter. And second positive read-through is that if you see the quarter number, managed services has surpassed expectation while consultancy remains little bit. So I think, consultancy may be muted because pending US elections. So at quarter two, you may see again doing better in terms of order bookings and growth both, and managed outsourcing continue to do well. So I think overall the numbers are quite positive and the guidance is very optimistic.
Let me come to you, on the Indian IT, because, Accenture's numbers, they're usually seen as a bellwether for Indian IT companies as well. So now that, Accenture has revised, they've raised their full year's revenue target, from 4 to 7% from an earlier estimate of 3 to 6%. What does it mean for the Indian tech companies?
So see, obviously, every company has been talking about what is behind in terms of growth for last 2-3 quarters now. So I think that will continue. Just remember, there are two differences. One, in case of Accenture, it is an August ending company, so they did not have the December effect, which will be there in Indian IT company when they report numbers. The seasonal impact of the furloughs, that is not there in Accenture's number for the reported quarter. It will come first quarter, but again in first quarter they have 2 good months, Jan, Feb. While for Indian ITs, December will have a furlough now impact. Second thing, I think that, Indian stocks have run up too fast and too much in last 6 to 9 months. So while numbers will improve and guidance may also be upgraded in few cases, but we have to see that how much of that is priced in. In my view, many of the stocks have just run up quite a bit in anticipation of good numbers.
Coming to you on that, because Indian IT is one pack that has really stood the test of time. In a mid-market correction, Indian IT has been really holding the fort. So like you mentioned, you said that some of the companies have run up, they have jumped ahead of themselves. Is that what you're saying, or what is going to be the guidance going forward? And if that, is there correction then on the cards for Indian IT?
Indian IT correction will only happen post the numbers, if at all it happens, and also if there is income for doing business once and that's the way to expanding is getting.
All right, we seem to have lost Sandeep. There's a big technical glitch, but we'll get you more on that. Let's move on then.